Ladies and gentlemen, I'm very happy to welcome you this afternoon to this joint General Assembly meeting of AXA that I'm chairing over as the Chairman and CEO of the group, with Mr. Norbert d'Entresson, Vice Chairman of the Board, Mr. Denis Duverne, Deputy CEO, with Nicolas Moreau, Member of the Management Committee and Chairman CEO of AXA France, Mr. Jean-Laurent Granier, Member of the Board and CEO of the Mediterranean and Latin America region and Chairman and CEO of AXA Global P&C, of Mrs. Véronique Veil, Chief Operating Officer of the group and Member of the Executive Committee, and lastly with Mr. Gérard Arlin, Chief Financial Officer and Member of the Executive Committee, who's sitting here with us. I would like to tell you that non-shareholders are in this meeting and that therefore the General Assembly is a joint one and a public meeting. I would also like to say that the discussions, as the whole of this meeting generally speaking, are being streamed through our website axa.com. As it is generally the case, we're going to follow the formalities for the opening of the meeting and setting up the bureau. This General Assembly meeting is meeting upon a first notice that was sent out. The notice was published pursuant to the legal dispositions in a notice published on February the 17th, 2012 in the Bulletin des Annonces Légales Obligatoires, and also through a notice of meeting on March 16th, 2012, as well as in the legal bulletin Les Petites Affiches on March the 16th, 2012. I was informed that this assembly meeting can meet regularly in its ordinary and extraordinary form. The quorum is 10,032 shareholders representing 1,385,000,000 and a few shares, hence just as many participants in it, and 1,694,000,000 voices, i.e. 64.82% of the total voting rights existing. Now, of course, I will give you the final quorum before we vote for the different resolutions, once all of the shareholders and all of the votes of shareholders represented will have been counted. So I declare this joint assembly meeting open, and I would like to call as scrutineers, and if they're willing to accept this responsibility, I will call two shareholders who have the greatest number of votes by others. These are Mr. Claude Bébéard, representative of AXA Assurance IARD Mutuelle, of which he's a director, and Mr. Jean-Pierre Monnier, a representative of BNP Paribas. And there's also Mr. Martineau and Madame Valbom, who are both deputies for the two aforementioned representatives. I thank them for accepting this responsibility, and the secretary for the assembly will be Mr. Denis Duverne. The statutory auditors, which were called by registered mail, are here. And these are Mr. Michel Laforce and Mr. Pierre Coe for PricewaterhouseCoopers Audit, and Mr. Gilles Magnan and Philippe Castagnac for the auditors Mazar, who are sitting at the table in the first row. So, I have all of the legal documents available to the members here present, and shareholders who might have requested it have received the documents that they were entitled to, or were able to read them either on our website or at our headquarters. I'm also very happy to be able to see the other members of the Board of Directors present. Mrs. Wendy Cooper, Mr. Jean-Martin Folz, Mr. Anthony Hamilton, Mrs. Isabelle Cocher, Mrs. Swet Fern-Lee, Mr. François Martineau, Mr. Giuseppe Mussari, Mr. Ramon de Oliveira, Mr. Michel Pebreau, Mrs. Dominique Reinisch, Mr. Marcus Schenk, and are also attending the meeting the different applicants whose names are going to be submitted to your voting. And here I would like to mention Mr. Stefan Lippe. So we're calling this joint assembly meeting for the attendants to be able to vote 17 ordinary resolutions and 6 extraordinary resolutions. As every year, I will request the Assembly not to force me to read out in extenso the agenda, because you have it anyway in a simplified form on the screen. So I would like also to request authorization not to have to read out the whole report of the Board of Directors, which anyway is the annual report for 2011, which is made available to whoever wishes at our headquarters, and it is also available at the entrance of this room. So, I think this will give us more time to be able to answer your questions. We have received written questions, and I'm sure we will have more oral questions from members here in the room. So, as previously, we will use electronic voting devices. You will be reminded of how they work before you need to use them, and I think they were handed out to you when you walked into the room. Ladies and gentlemen, I'm going to start, as I usually do every year at these General Assembly meetings, by trying to paint a broader picture of the situation and what was the business of the group for 2011, of what the challenges are for the future, what we are doing and what we are taking it upon ourselves to meet the challenges, and to try and position our company as best we can in the general competitive panorama of this ever-changing world, which is changing in an unexpected and chaotic way. After that, Denis Duverne will give us a presentation, like every year, and he will give us more details about the figure of 2011 as a fiscal year, and then a presentation by Norbert d'Entresang, Deputy Chairman of the group, who will share with you a certain number of topics that are related to governance within our group. Just a couple of words about our business, who might seem like stating the obvious to many of you, but they might be worth reminding us because our business is a global business. And this business is there to meet needs which are increasing, ever increasing. When I say it's a global business and that the needs are increasing, it's because of the fact that life expectancy is ever lengthening. The population is growing older by 1/4 per year. In other words, a baby born tomorrow will live 8 hours longer than a baby born today. That's a way of putting it, and that's the equivalent of 1/4 of lengthening of life expectancy over a year. So the reduction of the leeway that states have in mature countries means that in mature countries, which are well managed, is generally left to public enterprise like ourselves to be able to provide our customers with a certain number of services in the businesses which are ours. The developing of the middle class in emerging countries and their access to another standard of living, which is generally the purview of more developed countries, has enabled us to develop new products and to find new customers in these emerging markets. In Asia, of course, but not only in Asia, like we've seen in our developments, or in the developments in several of our lines of business of the group. Now, the general environment is volatile and is full of shocks, so we have to be able to ensure providing a certain number of crises after, or services after crises, whether these crises are physical or financial, and the need for guarantees increases. And lastly, people who have an ability to build up their savings realize that if they want to have long-lasting savings and optimize the management of these saving funds, they need help and advice, and I think we can provide that. Access core business is based on people's needs and on the evolution of the needs, and this leads us to say that we have 3 major pillars. One is property and casualty, which is protection against any damage one can suffer or that one can cause. Second pillar, health and protection, which is something that we want to separate from asset management, because in France we generally put everything under the same heading, which is life insurance. But there are two parts to life insurance, or to the category of life insurance. One of these parts is health and protection, and the other one is property casualty and asset management. And all of these are our core business, if I may say. And this is what we want to develop in mature countries, but also in emerging countries, because we believe that this is really what our customers expect, what our shareholders expect, and what our teams know how to do. When we look at 2011, for example, and the fiscal year, a certain number of figures shed some light and are worthwhile reminding us of. For the third consecutive year, AXA was acknowledged to be the first brand of insurance in the world by the Interbrand classification. This classification is a reference in the field of insurance, and I think this goes to show that our policy was successful. Our policy, our management policy, is 25 or over 25 years old. When Claude Bébert decided to launch the AXA brand in the middle of the 80s, it wasn't that sure that our brand was to become an asset. Whereas today we're really ahead of the flock. We're number one in this classification. We're challenged by our competitors, but I think the quality of our brand and the fact that it is acknowledged to be a number one by the outside world is certainly an asset, not only in mature markets, because customers put forward our quality of service, the quality of the products, the quality of the working relationship, but it's also an asset in emerging countries. This is something that we can see through the quality of the partners who want to cooperate with us. And that's another asset I think our teams have, is to find the right partners. Our brand means that we attract an increasing number of customers. Last year, we reached the symbolic level of 100 million customers all over the world. In France, we have roughly 8 million customers. We have 100 million, as I said, in total, all over the world, and this is an ever-increasing number. And we see this as being a token of our continuing progress. When I say the group, I don't mean that we are a group raking in premiums from customers. No. The group is a group providing services to its customers, helping them to prevent any risk or to help protect them. And when they have to suffer risks, the company compensates customers for the damage. And I think it's interesting to know that last year we paid out 18 billion euros in compensation to our customers in casualty. If we need to convince ourselves that the insurance business is an important factor that contributes to the stability of society in general, and to the stability of economy, generally speaking, to its growth and to its rebound, I think this figure goes to show the obvious. I mean, 18 billion euro is a considerable amount, and I think this means that companies and individuals can overcome shocks, and this means further investments and further employment when we're talking about companies. Now, the rate of satisfaction rate of our customers is an indicator. It has the pros and the cons of any indicator. They can be questioned, but for those of you who are familiar with physics, Robert Val said, what is important is variation around a figure. So this level of satisfaction is ever increasing. It's been increasing for the past 6 years. That doesn't mean that we can't do better. That doesn't mean that the quality of the service that we provide in the group cannot be made better. We're all convinced that it can be. But we still have noticed that things are getting better 1 year after the other. The figures show that our group is developing, that our group, everybody in the group is trying to do his or her job as good as he or she can. But let me tell you a few figures about the environment, the general environment in 2011. There were many natural catastrophes and natural disasters and tempests and storms and all of the kind. This, of course, we only need to mention the earthquake and the tsunami in Japan as the major event, 1 in 200 years event that affected, of course, society in Japan. We have many employees in Japan, but we also have many customers. And there was another catastrophic event in Asia, which were the floods in Thailand. And this is comparable to the floods that affected New Orleans a few years before. All of this to say that natural disasters are increasing in frequency and in severity. When I say severity, these storms are more and more severe, and because wealth is more and more concentrated along the coastlines or the routes of communication, when anything happens, of course, the damage is all the more severe. Unfortunately, and this is something that is I've often repeated, we had floods in the south of France. This happens very often, unfortunately, and these were significant in severity. Financial environment was also chaotic, and many things testify to that. Stock prices, of course, went up and down. And it's pretty clear to all of us who are here in this room and who are interested in society, generally speaking, in the economy more specifically, and in stock prices, they knew that economy and economic environment was restricted and limited by the crisis. We went through a very strong crisis, with specific difficulties in the Eurozone. The Eurozone, of course, needs to be doing better now after these difficult times. Stock markets are still going down, unfortunately, and this seems to be a trend that we've noticed as an ongoing trend for the past 10 years. We're in a very slow market, have been for the last decade, and historically speaking, this is long-term for a bearish market. Now, the situation is contrasted and is difficult for financial companies and for insurers, because we have at the same time very, very abnormally low interest rates in large economies such as the US or Germany, and risk premiums that are abnormally high in other economies. And lastly, the main feature of these markets, which are declining markets and very chaotic, is that they're highly volatile. And in a certain number of cases, this makes our business all the more difficult. Plus, the regulatory uncertainty, which is another element worth mentioning. Never has regulatory activity been so important and has applied to so many fields and has had an impact on so many financiers. Because our regulators want to minimize risk, and of course, as a result of the crisis, and because quite naturally the sophistication of products and financial products, regulation has become all the more complicated. Competition between banks and pension funds is ever increasing, and in the insurance field, we lag behind in the implementation of Solvency II regulations, which is making the sector a bit more opaque to investors. And there are still a certain number of uncertainties on the point of the negotiations of Solvency I and II. And Solvency II will either be a competitive asset or tool, or it can be a real burden for companies whose core business and control centers are in Europe. And lastly, another question mark. In regulators' minds, there's another question, which is the optimal size of financial regulations. For the past years, the fact that large groups existed and set themselves was considered as a good thing because it seemed to make the whole thing more simple, and it was a factor of rationality in management. But today, the fear of seeing these financial institutions as being dangerous animals because they're too big is a tendency, and regulators make them pay, or make larger institutions pay a heavier price. So large banking institutions, or banks and financial institutions, have been submitted to capital requirements in line with their size, and the quality of risk management would rather tend to decrease with the size. So in this context, which is one of a developing world with many new opportunities, which are certainly positive, but also an environment which is chaotic, with all the difficulties that go along, anything unexpected, which are the main challenges our company and our group are facing. There are three. Well, there are many, but if we want to boil it down to the main ones, there are three that seem essential to us. The first one is to develop better access to our customers, and that's the key element, because without our customers, we don't exist. Of course, it's quite obvious, but access to customers is something that is changing in many industries, and especially in service industries. This doesn't mean that we provide, or it does not mean because the products we offer are a bit sophisticated that we cannot have easy access to our customers. Look at food distribution or the consumer products division, book selling or the cinema. They have changed their distribution, and it's changing. Distribution is changing in our business as well. Our customers' behavior is changing, and developing a better access to our customers is, in the long run, over and above the financial results of the group, our number one challenge. Second challenge, in a universe in which resources are costly, the good people are rare, capital is expensive, know-how is difficult to mobilize, and our second challenge, optimizing our resources or the use of these resources, is essential. And the third one, which is just as important for a company like ours, in which financial management and risk management are very important, we have to try and decorrelate our financial results from any market shocks, while at the same time abiding by regulations. When markets were ever increasing and not chaotic, having results that were in line with the market was considered a good thing. But when you are in a situation in which the markets change in an unexpected way, we have to carry on doing our business and try and reduce the sensitivity to the market. To meet those three challenges, we set up a strategic plan that we already mentioned in the previous meeting. And this plan is called Ambition AXA, AXA Ambition. It is based on three pillars or three fundamental axes. And these are selectivity in our lines of business, acceleration of business in emerging markets, and increasing our effectiveness everywhere. At the same time, basing ourselves on trust and success, and increasing our orientation to our customers. To come back to this matter of accessing our customers. I was saying our customer basis was changing because our customers don't behave the same way as they did 10 or 15 or 25 years in the past. And they don't even behave like they used to 4 or 5 years' time. So I'd like to say these barbaric words that we have direct customers, quote unquote, hybrid customers, quote unquote, and traditional customers, quote unquote. The more traditional customers are those that exchange with us, correspond with us according to traditional distribution channels, with whom we have personal contacts and who tend to use traditional means of communication like written form or the telephone. These traditional customers are less and less numerous year after year, because customers tend to prefer the use of email and the internet. So at all stages in life, communication modes are changing. And if we don't adapt our distribution networks to take better care of hybrid customers who use one or another mode of distribution, and if we don't adapt to capture the increasing proportion of customers that we consider direct, quote-unquote, customers and only use emailing or digital modes of communication to contact us, we will lose customers and we will not be able to regain new customers. So we have a very high responsibility here, which is to modernize our networks, and namely to increase the effectiveness of the contacts we have with our customers. We have an important problem, which is to develop multi-access. What I call multi-access is our ability to provide advice or anything else, no matter what time of the day or which day of the week. And this is the problem that most service companies have. It's not because our service is, how could I put it, less immediately perceptible or like electricity is or water distribution is, that the problem is less important. Not at all. And we have to stress the importance of our direct customers, because this is certainly an axis for development in the future, with new generations and with new lines of business. So to provide our service to customers all over the world, we have to carry on investing in these new modes of communication. We have to hire new competencies in our employees, and this is something that goes beyond distribution per se. And This has to do with the internal organization of the company as well, and the quality of the service we provide, after having sold, of course, our products. So accessing the customer as a topic, both in mature markets and in emerging markets, no matter which products we're talking about and which markets we're catering to, is the number one topic. Second one, optimizing our resources. When we say effectiveness as being one of the pillars of AXA ambition, what do we mean? Well, we mean it's imperative for us to optimize the use of our capital, and so as we can increase our productivity gains. In a context in which stock prices are very low, and when we're talking about the stock capitalization of the company, we cannot dilute shareholders' shares by increasing capital, just issuing more capital and doing another roundtable. So we have to carry on developing ourselves by using the existing resources and the available resources we have. It's our ability to generate good results. We have to increase our cash flow that we generate by our current business, and it's also our ability to make better use of invested capital. And the best usage of invested capital might be to divest from certain lines of business, to change a certain number of products to make them less capital intensive, or even to change a certain number of structures or organizations. Capital allocation needs to be optimized. The use of capital needs to be optimized, and you will see that a certain number of operations carried out in 2011 are the result of this objective. So we stopped doing some things in some parts of the world to develop other things in other parts of the world, because some more effective than others. Simplification of the group. Groups, when they develop, tend to become increasingly complex, and this can go against transparency. So there's an everlasting efforts to make the organization very simple, to make sure that we can control risk and control the service we provide to the customers. So that's why we try and develop global platforms to share best practices and to have a very reactive internal governance. Productivity gains, quite traditional ones, reduce costs. We have a plan for 1.5 billion euros, and Denis Deverne will tell you later that we managed to save costs for 300,000 already, 300,000 euros. You see here up on screen we have sold our lines of businesses in Australia and New Zealand. We have sold one of our lines of business in Canada, and we have signed a joint venture with HSBC. And if we're simple, for 2011 we sold roughly for the equivalent of 4 billion euros, and we reinvested 3 billion, and we reduced the gearing by 1 billion. So much for the general panorama. We will develop this further. We set up a partnership with HSBC. I'm going to tell you more about it. And we're finalizing something in emerging markets, which is an agreement with a large Chinese bank called ICBC. ICBC has 260 million customers, and we would have been very happy with 200 million, but we have 260 million here. And this partnership with our CBC should be able to sell them life insurance products in China. This is just an example of our development. I could have given you other ones like casualty insurance, like you saw in the little video with Mandiri in Indonesia. Decorrelation of the results of the group to the shocks on financial markets. This is an important thing. We try and diversify our business and move towards segments that that generate more return, that are less capital intensive. 3 examples thereof. Diversification of our products. Today what we try to do is to increase health and protection, and we're less searching for growth in traditional savings products that are euro products. We try and optimize our portfolio management in mature countries by reorganizing product ranges, and in some cases we try and propose suggestions to our customers, new proposals of conversion of products from one to another in some kind of win-win deal with the customers to reduce management costs for us and increase the interest for them. And lastly, we set up partnerships in emerging countries with partners which are reference people in their countries. There are many opportunities, but we want to make sure we select them correctly, because these are opportunities which in a certain number of cases can be costly. Now, under Axe Ambition, our long-term objectives, we try to put them in a nutshell here to make them very simple to understand what we want to try and do. Financially speaking, is to have an increase of underlying earnings by 10% over long periods of time. Of course, this is chaotic, because we're not completely independent from the marketplace, and it is difficult, of course, to reach in a year like 2011, or it was difficult to do, because we had a combination of very low interest rates and low stock prices, and declining stock prices. But the group has a capacity to increase underlying earnings by 10%, and we think that we can have a return on equity at the end of this period of 15% after tax. Our objective is to bring the gearing down to 25%. It was at 32 years ago, 30%, and now it's just above 25%. And we want to generate cash flow to give us more leeway, than 24 billion euro of operational cash flow. In this general framework, how do we need to look at the figures of 2011 that Denis Villevergne is going to tell you more about? Well, in an environment that you've seen as being very difficult for the global economy, difficult for financial operators, and generally speaking, the financial results, are very sound. They're strong, with a great potential for rebound. About the balance sheet, which is an important element because it shows how strong the hull of the boat is, goes to show that it's pretty good. Our balance sheet is sound, with solvency levels and operational cash flow levels that are high. Capital management, i.e. the leeway we have and the ability to maneuver the boat, has shown that we are pretty flexible and reactive. And these elements, all of these elements, lead us to submit to the General Assembly meeting a dividend set at 69 cents per share, i.e. stable compared to last year, even if the general panorama was pretty chaotic and uncertain. A couple of words about the prospects for 2012. Here again, we must be very cautious given the general environment. So we want to be very careful, especially in front of an assembly such as this one. But we still all agree to say that there will be many challenges ahead. But economic recovery, although frail, is possible, and the European crisis is not yet over. The different events we went through in the past weeks have gone to show that we cannot disintoxicate from one day to the next and stop spending from one day to the next. There are issues that are still unanswered, and these are important issues. The impact of regulatory changes is one. The impact of what might be elections, not only in France, elections all over the world and in a great number of countries in the Eurozone. These countries are going to have to set up economic policies that will have to meet great challenges, namely the balance between reducing spending and increasing taxes, and this will have an important impact on our business. So all of this to show that the environment is uncertain. But there are a certain number of real opportunities arising in lines of business that are strong in emerging markets, and they are things that need to be restructured in mature markets that can provide players like ourselves that all in all have still remained profitable and strong, and as I said, there are many opportunities. Lastly, customer needs are increasing. Need for guarantee, need for advice, need for protection. These needs are ever increasing, so it's up to us to reap the benefits of this and to try and do our best and go the right way in this existing environment. I think we have 4 assets to do so. Our strategy is simple, is clear. Our balance sheet is sound. Our employees are very committed because they love the group, they love their business. and they like the contact with their customers. And lastly, we have customers who trust us. And I think these are 4 essential assets to help us carry on developing in a world that we know will remain highly demanding. So that's what I wanted to share with you by way of an introduction to this General Assembly meeting. Of course, allow me to repeat how we are sensitive to the fact that you keep coming to these meetings and that you remain loyal customers through these difficult times. We do suffer when we see the stock price at very low levels, despite all of the efforts of all of our teams all over the world. These efforts are pertaining to improve our efficiency, and we know that for some of the shareholders, the declining stock price is something difficult. So, allow me to explain our gratitude to all of you. So that's what I wanted to share with you, and now I'm going to give the floor to Denis Duverne, who will go more into the detail of figures.
Good afternoon, ladies and gentlemen. As suggested by Henri de Cast, I would like to speak about our AXA results for 2011. Our revenue was down by 3 billion euros at 86 billion euros, a 4% drop in absolute value, a 2% drop in comparable terms for 2 reasons. On the one hand, disposals, as indicated by Henri de Castres, that is disposal of New Zealand and Australia, as well as of Canada, and on the other hand, a more selective underwriting policy in the life business in the savings area, given the low interest rates, so that business was more difficult. The group remained a global group with operations mainly focusing on Europe, France representing 27% of our financial results, and Northern and Central and Eastern Europe 35%, the UK and Ireland 5%. So that's 2/3 of our results, whereas the United States represents 7%, the Mediterranean, South America 11%, Asia 7%, and Japan represents 8%. Looking now at our operations in high growth markets, the acceleration is right there where we wanted it in terms of life and protection. We saw a 16% growth in new business in line with our long-term goals. In terms of P&C, the high growth countries, the emerging countries that is, also saw a 16% growth of our operations. And finally, direct insurance through the web and the telephone, mainly in the auto insurance, which we are developing in 9 countries in Europe and in Asia. So the revenue growing by 8%. And this year, again, we'll see a bigger momentum of that particular growth. Now, underlying earnings after tax for the group was up by 2% at 3.9 billion euros, proving that in a very shaky year, our economic model is resilient. Such stability and slight increase in our results is owed to the fact that 2 out of 3 of our businesses are not very sensitive to the financial markets. The P&C and of big risk, which represents 46%, so a 14% rise. Protection and health, which represents 34% of our results, grew by 8%. So the difficulties in financial markets focused on savings and asset management, which is 20% of the results, down by 18%. You can see here that the AXA model, which succeeded in concentrating its operations on activities less sensitive to the financial markets, it's proving its worth in difficult times. Moving on now to our results after taking into account the capital gains and losses and the depreciation and the impairments. It was down by 15% at 3,589 million euros in 2011. It was impaired mainly by the impairment of our bonds in Greece and also through our shares in the stock markets in Europe. However, the net income was up by 49% at 4.3 billion euros, and that result benefited from the disposal of a number of operations, such as the minority stake in the life insurance in China, the disposal of what we had in Canada, in Australia, and in New Zealand, and that rise in our result was slightly impacted by the impairment of part of our what we did in the United States. Looking now at our balance sheet, it remained quite robust with our free cash flows up by 14% at 4.2 billion euros in 2011. The gearing ratio, as indicated by Henri Decart, moved from 28% down to 26%, and the solvency ratio, which is the current regime, reached 188%, one of the biggest historical levels, and the Solvency II ratio, which will be implemented as from 2014, it reached 148%, which remains a very comfortable level. It was down compared to 2010 due to the difficulties in the volatile stock markets, but still quite comfortable, I would say. The main ratings for the group remained within a strong range. AA- at Standard & Poor's and Aa3 at Moody's, AA- at Fitch, with negative outlook for Standard & Poor's and Moody's, which are widely linked to the situation of the Eurozone as a whole, more than to our particular situation at AXA, and stable with Fitch. To sum up our situation, we've proven in 2011 that our economic model is resilient, that our free cash flow from operations was growing in a difficult year, and that we had a robust balance sheet. This has enabled your board of directors to suggest a stable dividend at 0.69 euro with return or yield of the share at 7% at the end of December, which is very different from the price level, and the payout of dividends at 49% computed on the income from operations, and our policy in the payout is between 40 and 50% of such income from operations. Henri Decart has spoken about the AXA ambition that we launched in June in relation to the financial community and the press, and earlier with all our employees. That ambition AXA plan is up and running and is starting to bear fruits. Firstly, we're seeing an improvement of the profitability of our business in the P&C, our combined ratio, moved from 103% from 2010 down to 99.6%. When you're below 100%, the positive underwritings are there. This is a situation we want to have over the long term. We had two difficult years in 2009 and 10. Again in 2011, we were back on a combined ratio below 100%, as we had committed ourselves. And our ambition by 2015 is to bring this combined ratio down to 97% or even below that level. In terms now of the life and savings, the profitability of new business has moved from 22% in 2010 up to 25% in 2011, and this despite lower interest rates, which negatively affects such profitability and such to an improvement of the product mix, the development of protection and health mentioned by Mr. Decart, and an improvement of the country's mix, that is, increase of the share from emerging countries where we have profitabilities which are even higher. Now, the second element of that strategy is a better operating efficiency. We've made the commitment to reduce our expenses by 1.5 billion between 2011 and 2015, and we've reduced our expenses by over 300 million in 2011, so that now we are fully aligned with our game plan and confident about executing it. Third aspect now of that ambition AXA, and we manage dynamically our capital. As mentioned by Mr. Decast, we disposed of operations for 4.1 billion euros. If you add Tycoon Life, Canada and New Zealand, we invested in buying a minority stake in Asia, and we're able to deleverage ourselves at 900 million euros. To have such a solid balance sheet, AXA attempts to have a very good quality and a very good diversification of its portfolio of assets. Such portfolio of assets backed by general accounts has moved from 441 billion to 467 billion euros at the end of 2011, with 207 billion of govies and the rest of corporate bonds, assets mainly of good quality, even if, as you know, in the current period, we have to keep an open eye on state govies, and we invested mainly in corporate bonds. And state governments benefited from lower interest rates, and the value of stock markets, which moved from 18 to 14 billion euros, it suffered from lower stock markets. All in all, you can be certain that we are managing that portfolio of assets in a very cautious way, trying to optimize the risk-return couple on that particular portfolio of assets. With respect to the performance of our equity, of our share, it was quite disappointing since the 1st of January. The figures here on the screen are at the end of the 20th of April. It hasn't moved much as of today. The AXA share has risen by 5 or 6%. The performance over 1 year is minus 25%, and over 10 years by minus 37%. That performance compares negatively compared to the CAC 40 index, because that index over the 1 year was at minus 17, over 10 years minus 5%. It is less good than the sector of insurance over 1 year, but quite comparable over a period of 10 years. Now, when we compare ourselves to our main competitors, we can say in this respect that the two that were better than AXA over that period of 10 years are the CNP and MetLife, and all the others saw a performance that was much poorer. Our performance can be compared, or is less good than the BNP Paribas, but much better than the other major French banks. And obviously, we cannot be satisfied with the performance of our share price. However, we need to consider that such a performance was carried out in a financial environment which is quite volatile, and the size of our balance sheet linked to the performance of our life insurance accounts partly for such a performance. With respect to the shareholders of the group, it remained quite stable during that period. We are seeing that the first shareholders of the group remained the Mutual AXA, which moved from 13.5 to 14.5 their stake. Employees also rose at 7.3%. BNP Paribas remains steady at 5.3%. Individual shareholders also remained at a fairly steady level at 7.5%. And institutionals in France saw their stake go lower, down to 13.2%. And you can see that the Anglo-Saxon bloc, the UK, Ireland, the US, represents 29% of our shareholders. We have institutionals which are significant in the US and in the UK, and the rest of the world represents about 20% with a fairly good stability basis. Lastly, I would like to point out that we continue to make progress, sustained progress in terms of corporate responsibility. You can see on the right-hand side the rise of the extra financial ratings for the group. We saw a 4-point rise of our scoring on the Dow Jones Sustainability Index. Our carbon performance is at the best levels of the insurance business, and we launched also a number of initiatives which are quite aligned with the strategy of groups that are responsible. The Fund for Research, which was mentioned in the introductory film, funded 83 loans in the area of research in 2011 for 23 million euros. We wish to take forward the knowledge and understanding of weather, social economic risks, and linked to the extension of life and help people move on these issues. We believe that our business consists in protecting all our customers against those risks, and every risk cannot be taken into account by companies such as ours. Some must be taken into account by public authorities, and a general awareness of the level of these risks is substantial. We also developed a partnership between AXA and the CARE to help vulnerable populations to prepare themselves better to weather-related risks. And in several countries, such as Madagascar and the Philippines, you can follow such initiatives on Facebook, AXA People Protectors. Lastly, in the field of our print on the environment, we continue to make efforts with a decrease of 5% of our energy consumption, of 40% of our CO2 consumption, and 25% decline of our paper consumption. To conclude, I would like to say again that we have an economic model that is very resilient in this crisis and helps us with a good payout of dividends, with operating cash flow that is sustained and running a robust balance sheet, solid results, and we are on the right path with regard to our plan Ambition AXA, with first tangible results and improvement of the profitability of new business in life and P&C, and dynamic capital management and operational initiatives that are bearing fruits. Ladies and gentlemen, thank you for your attention. I'll turn it over to Norbert d'Entresangle. Before Norbert d'Entresangle starts his debate, I would like to point out that the report by the chairman of the board, in line with Article 225(37) of our trade code and bearing with the makeup of the board and the principle of a balanced equilibrium between male and women, and regarding the procedure of internal control and risk management. This is on page 412, and the next pages of our annual report. I'll turn it over now to Norbert d'Entresangle. Ladies and gentlemen, shareholders, good afternoon. In my quality of Vice Chairman of the Board of Directors, it is my honor to report to you about the governance of AXA in 2011 and also our remuneration policy with respect to its executive leaders. Up on the screen, you will see now a summary of the current governance put in place in 2010. As you can see, such governance is based around the board who takes the most important decisions and appoints the general managers, Henri Decazes, chairman, and CEO, Denis Duverne, delegate general manager. The four committees of the board, which are at the bottom of the screen, prepare the decisions of the board through recommendations. In quality of my Vice Chairman, independent director, my mission is to have a very regular dialogue with the other members of the board, the independent directors, and also with general management. I ensure that the independent directors can truly play their important role, and that communication with general management is as smooth and transparent as possible. In practice, I participate in preparing each board meeting together with general management. We review together the schedule of meetings, their agendas, or again all the documents sent to the members of the board. I also meet steadily the main leaders of the group during individual meetings. Besides, I chair the HR and Remuneration Committee, whose role is key in assessing the performance of the group's management. With respect to the work by the board, well, 2011 saw again a sustained activity. The board convened 14 times in 2011 against 12 times in 2010 with the attendance rate remaining stable at 85%. With respect to the directors, the 4 board committees held 20 meetings in 2011 and the number of people attending reached 94%. I therefore extend my thanks to all my colleague directors for their active contribution to the works of the board in 2011. Amid the key issues that the board handled in the course of the past year, I could underline reviewing the strategy of the group, considering the 2010 accounts, the half-year accounts, 2011, reviewing the acquisitions or significant disposals, notably in Canada and in Asia, considering the operations portfolio, the allocation of capital, and the businesses in the group, and the makeup of the committees of the board. As with every year, the board of directors has also assessed the way it operates. Jean-Martin Foltz, who is from the Ethics and Governance Committee, has collected during individual interviews or in the form of answers put in writing in a questionnaire, assessments and proposals made by each director. The main improvement points that have been identified, which were discussed during the board meeting on February 15, 2012, deal in particular with the information provided to directors in between the sessions of the board, the organization of such sessions, and further education for members of the board. With the prospect of your voting, which will take place later on, let me point out that the term of office of Wendy Cooper, member of the board since 2008 as a representative of employee shareholders of the group, will expire. On behalf of the board, I would like to thank her for the quality of her contribution in the course of the past 4 years. In order to replace Wendy Cooper as a representative of employee shareholders, 8 candidates will be submitted to your voting. Such 8 candidates have been appointed by the employee shareholders of the AXA Group during an internal election which took place early 2012. Mrs. Balichi Shehab, whose resume is shown on the screen, is a candidate that is recommended by the board of directors. Mrs. Balisha Shehab, following 30 years of experience in the field of insurance, out of which 22 years at AXA in Germany, in France, and in India. She's currently chief executive of AXA Business Services in India, and before that was responsible for the reinsurance business for the group from 2000 to 2010 within AXA Global P&C. Therefore, she has an in-depth knowledge of the group and of the insurance sector, as well as a very international profile. She is here attending the meeting with us. We are also suggesting to renew as director Mr. François Martineau. François Martineau is a lawyer and joined the AXA board in 2008. His resume is also shown up on the screen. Let me now introduce Mr. Stefan Lippe. Mr. Stefan Lippe, that the board moves to appoint as a new independent director. His resume is now up on the screen. He is attending this meeting with us. I thank you for your attendance, sir. Stefan Lippe has over 30 years of experience in the field of insurance, and that experience was acquired within the Swiss Re Group, of which he was a member of the executive committee starting in 2001 and then chief executive until early 2012. The board is happy with the prospect of welcoming Stefan Lippe, whose expertise will be extremely helpful.
Now, before telling you more about our compensation policy for AXA directors and other top managers, I would also like to thank Jacques de Chateauvieux. On behalf of all of the directors, Jacques de Chateauvieux I left the board of directors in February of 2012 in order to dedicate more time to the business of his own group, Jacquard Holdings. Jacques de Chateauvieux was a member of the board for 7 years, and he spent 2 years as the chairman of the supervisory board. This was between 2008 and 2010, and I think Henri de Castres wishes to say a couple of words. Well, I would like to echo Norbert d'Entresangle's thanks to Jacques de Chateauvieux and to Wendy Cooper, who for years, all the years they took part in the board's work, were very active and excellent directors and very challenging for the management and always very constructive. I'm only sure that their successors around the table will want to do the same thing and just as well as them. Let us now come back to the compensation policy for the directors and top managers. The different elements that constitute the compensation of the employees are here up on the screen. I think you can see the short-term compensation is made up of a fixed salary and an annual variable part. Then there are other elements of compensation, deferred compensation, that are made up of either options, stock options, shares, or performance units. The objective is to allow a convergence of interest between shareholders and managers in the medium term and in the long term. The compensation committee that I am chairing is responsible for putting forward proposals to the board of officers for the compensation of directors and corporate officers. In preparing these proposals, the committee takes a general appreciation of the different elements that constitute the compensation of corporate officers. The committee looks into the general practices of compensation on the market that is made up of companies that are comparable to AXA, both in Europe and at global level. And the objective of this benchmark is to come up with competitive compensations or compensation levels to encourage a better performance still, and to be in line in our compensation with the earnings and the results, the financial results of the company. The Compensation Committee reviews on a regular basis the general principles of our policy of compensation. And in this respect, the committee is very careful and very attentive to maintaining internal equity and to taking into account the individual performance and collective performance. As for the compensation in cash of the members of the board, it is, as I say, made up of a fixed part and a variable part. As I explained at the General Assembly meeting of 2011, the board decided in 2010 to rebalance the fixed and variable parts of the total targeted compensation in line with the recommendations put forward by the G20, of the Financial Stability Forum, and of the European Commission. This rebalancing, which was implemented on May the 1st, 2010, led the group to increase the fixed part of the fixed salary and to reduce the variable part. The variable part remains predominant in the total compensation for the top managers and corporate officers to only serve as an incentive to reach for high performance. And the level of compensation varies effectively, and it depends on the performance objectives. These are set at the beginning of the year and are made to enable real variability that is in line with the results achieved. By way of an example, the variable compensation of the chairman and CEO of the group has gone from 68% to 96% of the targeted amount over the last 4 fiscal years. Up here on screen, you can see the respective weighting of the different elements in line with the performance, which serves as a basis for variable compensation, or the variable part of the compensation. For our chairman and CEO, Henri de Castres, the group performance accounts for 60%, and his individual performance accounts for 40%. For the other members on the board, the performance of the operational unit is also taken into account, or of their operational unit. The compensation of the members of the Management Committee for 2011 is here up on the screen. For the Chairman and CEO and Deputy CEO, the total targeted compensation for Henri de Castres remained unchanged since 2008 at a level of 3.3 billion euros. The effective compensation he got in 2011 was of 3,071,000 euros. And the real variable compensation remains stable over 2010, but has been greatly reduced compared to 2009, minus 22%. The total targeted compensation of Denis Duverne remained unchanged compared to 2011 at a level of 2.2 million euros. And his actual compensation for 2011 was 2,083,000 euros, with a slight increase in the variable share of his compensation, plus 2% over 2010. In addition to this, AXA is carrying out a policy of distribution of stock options and performance shares and performance units for staff members in France, but also abroad. These attributions of stock options, performance shares or units generally occur at the end of March or beginning of April. All of the stock options granted to members of the Management Committee, obviously Henri de Castres and Denis Duverne, are submitted to performance conditions. In order for the options to actually be materialized, the evolution of the AXA share has to be more favorable than that of the reference index Eurostoxx insurance for a minimal time or period of time of 3 years. As for the performance shares or performance units, all beneficiaries, whichever their position in the hierarchy, are submitted to performance conditions for 100% of the performance shares or units granted. Performance criteria measure over a period of time of 2 years both the performance of the group, that accounts for 1/3, and the performance of the unit of the beneficiary for 2/3. As an example, the rates of the group performance for the last 2 share plans were respectively 95% for 2009 and 87% for 2010. In March of 2012, the Board of Directors granted a new lot of stock options and performance units and shares to a great number of beneficiaries. the global number of options and shares granted to top managers and corporate officers is stable for Henri de Castries and has increased by 6.5% for Denis Duverne. Conversely, the board of directors has decided to considerably reduce the number of stock options attributed. Minus 27% for Henri de Castries over 2011 and minus 22% for Denis Duverne. The share of these two corporate officers in the total granted accounts for 9% for the stock options, and as for performance shares is below the limit or the ceiling of 10%, which was set by the board in 2010, in line with the recommendations made by AFEP-MEDEF. The elements of compensation of AXA managers that I've just mentioned are described in detail in the AXA reference document, which is available at the entrance of this room or on our website, and I can only invite you to take a look at it if you wish to have more details. Now, what you can see here up on the screen is the historical background of granting of stock options and performance shares between 2006 and 2011. You will notice the number of beneficiaries, whether it's options or performance shares or units, indicated in the last column, has greatly increased since 2006. In 2011, the number of beneficiaries went from 5,827 to 7,269 people, which is an increase of close to 25% compared to 2010. In 2012, the number of beneficiaries should remain stable compared to 2011. I would like to highlight that this widening of the number of beneficiaries was carried out without any significant increase in the dilution for the shareholder, which is still slightly lesser than that of the previous exercises or financial years. Lastly, I would like to say a couple of words about the group's policy about profit sharing of staff members to the capital and earnings of AXA. On March 16, 2012, the board granted 50 free shares to every staff member of AXA in the framework of a new operation called AXA Miles, which is similar to that was already carried out in 2007. This attribution or granting of AXA Miles was meant as a tribute to all of the AXA members for the work conducted in 2011 and to associate them to the rollout of the strategic plan AXA Ambition. These AXA Miles, these 50 AXA Miles granted, can be divided into two parts. A first part, 50 or half of these 50 AXA Miles was granted to every single employee without any performance condition. And a second part, of which the final acquisition will only happen conditionally to the progression of the underlying earnings in 2012 for the share and for the index of satisfaction, customer satisfaction with the group. These are two indicators that are part of the AXA Ambition plan. In addition to this, AXA has conducted long-term, very deliberate policy of shareholding by its employees, and every year the group submits its share plan to its employees in France and abroad, and this would be a capital increase, similar to a capital increase, only restricted to employees. In 2011, over 26,000 employees in 41 countries took part in the capital increase operation for a total subscription amount of 332 million euros. And on December 31, 2011, the employees and agents of the group held 7.34% of AXA capital. Lastly, in France, roughly 78 million euros were paid out in 2011 for profit sharing to a total of 26,000 employees, i.e. an average amount of 3,000 euros per staff member. Ladies and gentlemen, allow me to thank you for your attention. I would now like to call to the rostrum Mr. Michel Laforce and Michel Castagnac from PricewaterhouseCoopers and Mazars, respectively, to come and make a presentation of their report. Dear Chairman, ladies and gentlemen, Mr. Laforce and myself are happy to be able to sum up the conclusions of our work of the examination of accounts for the fiscal year 2011. And we have established this report, we have drafted this report that we would like to read out, or rather sum up if you agree, because we will mention this in our comments, because this report can be found amongst the different documents that were handed out to you. The first report bears upon the accounts of AXA France, the second one on the consolidated accounts for the group, AXA Group, and the third report on the internal control system that we comment in our own report on the internal auditing and the financial and accounting information document for AXA. The fourth one bears on the regulated conventions. This is a special report, and this year there have been 3 specific reports bearing on capital operations and issuance of equities that have been proposed to you. As for the first report, referring to AXA's financial accounts and corporate accounts, it is presented on pages 457 and 458 of the reference document. And of course, let me remind you that the objective of this document is to reassure you reasonably on the regularity, the conformity, and the sincerity of the corporate accounts of AXA, that there are no significant anomalies, and this, of course, in line with the French accounting principles. This was done based on our auditing carried out by both our consulting firms in all of the entities that are part of the scope of consolidation of the group. The annual report on the financial accounts of AXA France, there's been a change in the accounting method that is detailed in the annex on the hedging against Forex and participation in anything in currency. This is a change in methodology that we will not comment, but we certify unreservedly the accounts certified by the Board of AXA France. And in addition to that, we have no observations to formulate on the specific verifications in line with the law, namely those on informations communicated to shareholders and in particular in the management report. Secondly, the second report which we drafted, which can be found on pages 403 and 404 of the reference document, has to do with the consolidated accounts of the group. And our conclusion is that we certify unreservedly these accounts in line with the IFRS standards as adopted by the European Union. And in conformity with our professional standards, we paid particular attention to a certain number of points, and we justify our appreciations on a certain number of points, reminding us all that the specific conditions for the preparation of these accounts, and in particular in line with accounting standards, were marked by the degraded economic condition and the financial crisis, with a crisis of sovereign debt that developed in some countries of the Eurozone. Given that framework, our appreciations were on the appreciation of financial assets, on technical provisions of the insurance business, on the deferred goodwill, on valuation of portfolios and participation in benefits, but also on the goodwill, which was tested for renewability, and on assets and liabilities for deferred taxes, and also for hedging activities. So all of these appreciations we gave in the reports are part of our auditing action of the consolidated accounts for a group taken as a whole, and have contributed to the opinion that we state, which is an unreserved certification of the accounts. We have dealt with the information of the management report of the group, and in this respect you have no comments to make on the sincerity or the conformity of these accounts with those presented by the groups and presented in the previous presentation. Our third report bears on the report of the auditors to the board on internal control and internal auditing. The objective, I remind you, It's was for us to deal with the problem of procedures used for dealing with financial information, drafting the report. The idea was for us to be able to assure the sincerity of the information, taken into account the objectives and the general procedures that are part of the internal auditing system, so as to be able to certify the sincerity and the quality of the financial information of the chairman. So we have no observations to make on the information that lies in the report, and we certify that there are no anomalies and that it holds all of the elements of information that the Code of Commerce requires. I will give the floor to my colleague for the next part of our report. Thank you very much, ladies and gentlemen. I would like to make a presentation of our report on regulated conventions and then our report on the capital operations. For regulated conventions first, the objective of the due diligence was to make known to the General Assembly the conventions and regulated commitments that we knew of. Our objective is not to give our opinion on the quality of these. We have only one to mention for the past year, which was an operation which was exclusively internal to the group. And it's the agreement passed between AXA and its subsidiary AXA Asia, an agreement according to which AXA brought the participations it held to the companies acquired in Asia. Because this was an internal operation, as I said, this contribution was made on the basis of accounting values and accounting standards in line with the report drafted for the committee on accounting. As for the regulated conventions already approved by the Euro Assembly during previous exercises that was carried out. After then, we would like to mention three conventions or agreements. First of all, the Memorandum of Understanding between Schneider Electric and AXA for maintaining minimal participation and cross-holdings. This memorandum will come to maturity at May 15, 2012. Also, there are the corporate officers' commitment on a supplemental retirement plan and a social protection plan and the attribution of compensation in the event their term of office will come to an end. And then there's a memorandum of understanding between BNP Paribas and AXA for stock options, cross-stock option. This for 3 years as of August the 5th, 2010, and is renewable, constantly renewable, except for denunciation by one of the parties. The detailed conditions are presented on pages 166 to 169 of the reference documents. As for now, the reports on operations relative to capital and the issuance of equities, we have two reports on operations, capital increases that come under resolutions 18 and 19. There's one, a capital increase for the people who take shares in a savings plan for the company, and then a capital increase for a category or a determined category of beneficiaries with a common ceiling of 135 million euros nominal. The capital increases are also made with the suppression of preferential subscription rights and with the delegation to the board members with an option of sub-delegation for a period of time of 18 months to set the modalities, effective modalities of these operations. In conclusion, we say that with the reservations of further examinations of condition for capital increases proposed, we have no observations to make on the modalities of determining the price of issuance of the capital securities to issue. But since the price of issuance is not yet set, we have no advice to give on the final conditions of the capital increases in the future, and thereby of the proposal of removing the preferential subscription right in line with Articles R225, 116 of the Code of Commerce. We will establish additional reports when the capital increases will be completed. Then we have one last report on operations to capital reduction. This is an operation for reducing corporate capital by cancelling ordinary shares pursuant to resolution 20. Cancellation in with a limit of 10% of capital per period of 24 months of shares purchased through the implementation of an authorization of purchase by the company of its own shares and delegation to the board of directors with possibility to subdelegate for a period of time during 18 months. So in conclusion, we have no observations to formulate on the causes and conditions of capital reduction. This concludes the report we drafted for the fiscal year 2011. I would like to thank you for your attention. Thank you, gentlemen. Now, I suggest we move on to the more interactive part of our assembly meeting. But in accordance with law, I have to read out the questions that were submitted to us in written form by some shareholders. We received 8 questions, 5 of them in due time, and 3, but we still decided out of courtesy to those who took the time to write to us to take them into account as well. So we will deal with all of those as fast as possible to then give you the floor. And we try to share out the answers. The first question put to us in writing by shareholders was given to us about the structure of shareholders. De Duverne answered the question on the structure of shareholding. I think he answered it in his presentation. I hope to see a page up on screen called a diversified shareholding, which states that the proportion of individual action is 7.5%. French institutions account for 13.2%. That employees hold 7.3% of corporate capital. And the number of shares bought and sold during the year was 3 billion for last year. That's 1.2 times the total amount of corporate capital. So much for the first answer. The second one was put to us by Mr. Jérôme Guilleux. And this is a question that bears on the retirement, my retirement plan. I'll ask Norbert Rentre-Sangle, Mr. Henri de Casby, why you prefer a supplementary retirement plan in cash rather than ensuring your retirement through AXA products. Well, I will say I trust both, but anyway, Norbert, I'll let you answer the question about retirement.
En date du 13 avril, mail of April 13, 2012, the board points out first that Mr. Guilleux had already put that question during our 2011 shareholders meeting regarding that pension regime, and information had been provided to the person that put that question. By way of a reminder, the board specifies that this supplementary pension plan has been existing for a long time. It was put in place in 1992. Following the organization of some provisions in this regime, it was voted by your shareholders meeting, which approved it by at the rate of 93%. The features of that regime are specified in the report of 2011, page 56, in line with the ASEP-MEDEF recommendations of October 2008, in line with the remuneration. Now, the amount of that top-off amount as executive top manager for at least 20 years, he can obtain an overall pension equivalent to 40% of the average of the gross remuneration of the past 5 years preceding the time when he will retire if it exceeds 12 times the annual ceiling of Social Security. All the executive managers in France, that's over 400 people in France, are entitled to such a regime. As regards Henri de Castres, he decided in 2010, individually on a volunteer basis, but in discussion with the board, to limit the remuneration that could be served as a basis for calculating his overall pension. To this day, and given his seniority in the group, which is over a period of more than 20 years, what is paid to him in terms of the top-off pension would represent about 31.5% of his annual remuneration, which is in force as of today. Thank you, Norbert. There's a question from the holding Exidio regarding the same question in regard of your floating and the consequence of the value of the share. How can you warrant for 2011 your remuneration and allocation of over 4 million euros, or your supplementary pension, your golden parachute, and the fact that you hold so many? For what amount have you bought personally these shares? No indication given. I believe this question was widely handled in the presentation made. Nevertheless, we'll remind you of a number of elements. This question was raised by mail in the holding Exidio. Also has questions about the holding of AXA securities by Henri de Casse and the number of shares that he personally bought and for which amount. On the top-off pension plan that Mr. Henri de Casse benefits of, the board on this point has nothing to add. Regarding the compensation, if he would step out of his position, if he were to leave the group, they were submitted to the voting of your assembly in 2010 as part of the compliance of the status of Henri de Casse with the recommendation accept MEDEF. They cannot exceed 24 months of remuneration as subject to performance conditions. Shareholders can refer to your annual report in 2011, page 157 for further details. The remuneration elements of Henri de Casse for 2011 were already presented during this assembly. In response to the observation by the Exidio Holding, the Board of Directors adds that the evaluation of the performance of an executive manager cannot be limited to observing or watching the share price of the company in the case of the bonus or variable remuneration of Henri de Casse, and as indicated, this is assessed on the basis of his individual performance as assessed by the Remuneration and HR Committee, then by the Board of Directors, as well as based on the performance of the group as measured by the underlying earnings per share and return on equity and the customer satisfaction index. As part of their assessment of the group component of the bonus for Mr. Henri de Casse in 2011, the Remuneration Committee and the Board of Directors have taken into account the following elements. Underlying earnings per share, which is stable compared to 2010, a return on equity exceeding the goal that was set, and the rise in the customer satisfaction index. In addition, AXA has been undertaking the allocation of performance shares and options for its top members and employees quite widely to associate them in the long term in the performance of the shares and align their interests with those of shareholders. Besides, the board has set a policy whereby it is mandatory to hold AXA shares for the members of the management and executive committees for the AXA group. Such policy requires that each member of the management board and of the executive committee hold during their functions a minimum amount of AXA representing a value multiple of the annual remuneration paid during the previous year. Fixed salary increased with the bonus. For the CEO and chairman, he must therefore hold at least the equivalent of 3 times his overall yearly remuneration. As pointed out in the last annual report, Henri de Casse was holding at the end of December 2011 the equivalent of 5.6 years of remuneration in terms of shares of the group. The decision by Henri de Casse to invest in AXA beyond the minimum of 3 years of remuneration is a decision which belongs to him personally. And regards his assets, the free shares that have been allocated to him by the company since 2005 were systematically made public in the annual reports by AXA. At the end of December 2011, they represented the equivalent of about 25% of the shares that Monsieur de Casse held at that time, the rest amounting to securities which he acquired gradually since he joined the AXA group in 1989. Thank you, Norbert. If I may add one thing to answer that question. I consider in order to prepare my retirement, the best investment is a combination of the products of the group and a significant investment in its shares. We have a question for Mr. Augier, which is dealing with the PNC issue, and Jean-Laurent Granier will be requested to ask in terms of the auto insurance and in the aggravated insurance. There's an individual premium. AXA within certain limits has to be limited, and on what basis and according what.
Merci, mesdames et messieurs. Bonjour. Donc, en supposant.
Ladies and gentlemen, the question from Mr. Augier, which comes from the OSON. I can provide the following indications to the housing insurance and to the auto insurance. The price paid by new customers, well, the premium depends on a number of features which define the risk which is insured. It can be in the case of a housing insurance. Depending whether it's a flat or a house, a number of rooms, how much they want to have guaranteed, the quality of it. Is he an owner or occupying it, a tenant? And finally, geographical area in which he is. The prices are set depending on the specific characteristics of the contract and the housing that has to be insured. In the course of the time, these prices evolve based on other data, especially the revaluation index which is applied in the contract, and finally the losses, that is the seriousness of claims that we experience on that particular portfolio. Having said that, there's in the housing insurance or in the motor insurance, there's no malus, bonus or malus, which enables to adjust the premium based on the quality of the individual risk. As from the underwriting part, one part of the question was part on the nat cats and the natural catastrophes, and usually there's a P insurance. And he has automatically a natural disaster insurance, and the prices are imposed by law. And naturally, we're trying to develop professionally regarding all the prices in terms of personal lines, the fact of recognizing the prevention, the good behaviors, the behaviors that minimize risk in the way we set the premium to be paid by the policyholder. Thank you very much. We have a question from Mr. Jean-Paul Alliot, and Nicolas Moreau will answer it, who is the CEO of AXA France. As part of a claim by a customer, can the mediator decide not to interfere, and can we advise only a judicial recourse? In disagreement with the proposal by the mediator. Thank you, Henri. Thank you, ladies and gentlemen. Mr. Alliot is referring to his litigation with the customer department of AXA France, and he had written already during the 2010 and 2011 assemblies in response to the question asked. We are specifying that AXA France tries to grant all its importance to satisfying its customers. The usual AXA contact man and the AXA teams dedicated to that are seeing to it daily. However, it can happen, as we have the case here, there might be some disputes. In this case, AXA France makes available for its customers the services of a mediator who must be confidential, be neutral, and loyal. His role is to express an opinion in order to try to find an issue to a solution to the litigation based on our mediation charter, which is a document which is available on our AXA.fr website. The customer may follow or turn down the proposals made by the so-called mediator. If there's disagreement on the proposals by the so-called mediator or following or on the basis of the recommendation, a new mediation procedure is no longer to be considered, but the customer may resort to take legal action and initiate a recourse before the courts. Thank you very much. The last two questions, and I will ask Gerland Arlin to answer. The shareholder who asked them would like to remain anonymous. The annual report on page 211 shows a decrease of 15% of life contracts who moved from over 20 billion to 17 billion. If we have available following this chart, the methodology used, we do not see why such a drop has occurred. Good afternoon, ladies and gentlemen. The value of the contracts in portfolio, because it is the value of the contracts in life portfolios, is revalued at the end of each closing and is based on the conditions of the market at the end of December 2011. And the conditions were very unfavorable then. Why? Well, firstly, because interest rates were very low. They have dropped tremendously in the course of 2011. And secondly, the value of option is guaranteed and hinges on the volatility, the spreads, and the bonds in portfolio, private bonds, and this was also an adverse element. And besides that, the value of contracts in portfolio by agreement, the embedded value, is calculated by having a forward-looking vision about all the annual growth of the values of assets at the riskless rate, which on average was at 2.8% at the end of last year. In reality, if we applied our own projections, hypotheses about the growth in markets, we would have higher rates, which as a consequence would be to revalue these portfolios, and compared to the previous year, it would be a lower decrease. The last question is a question about sensitivity to interest rates. Given the volatility that we saw last year and this year, the interest rates of sovereign debts, the scenarios on page 213, which limit to plus or minus 1% variation on the interest rates of the sovereign debts, are they relevant? Shouldn't we ask ourselves about what will happen with if these rates may be tumbled in Italy, Spain, and Portugal, but also in France and Belgium? The variation of 200 or 300 basis points are no longer theories, but also there's a risk of our Swiss entities, and we have forward contracts there. And is the figure at the end of 2011 unknown? With the first part of the question, the investments of financial, which is referred to here, which are mentioned on page 216 of the annual reports, are government govies. If we relate them to all our assets presented by Denis Duverne before, over 460 billion euros, it means that our exposure on sovereign risk in Italy, Spain, and Portugal represent 5%. In Belgium, they represent 5%. And in France, they represent 12%. Notice that these figures are quite low. Why? Because we have a very widely diversified portfolio thanks to our great geographical diversification, and also corporate bonds, which represent over 1/3 of the total amounts of our assets. To answer the question, if there's a major tumbling of sovereign rates, it would have an impact on the fair value of sovereign loans. But if the securities are not in default, and if we don't expect any defaults of the issuer, then our very good assets and liabilities is that such that it would enable at least to respect our commitments without any difficulty. Now, practically, it would mean that the embedded value, if there's a widening spread, would be lower, the economic solvency would be lower, but it would raise the question of taking into account the widening spreads on the valuation of the fair value of our liabilities. And that is the topic which is being discussed as part of the Solvency II measures, where all the industry is requesting contracyclical adjustments just in case there would be a bigger widening spread without a potential default. Now, a last word on our investment policy that we have been carrying out in terms of the bonds in 2012. It takes into account that risk of widening gaps on sovereign rates. We want to invest 50% in corporate bonds, 25% in loans guarantees and 25% only in sovereign loans in the most solid countries. The last question was dealing with a figure, in particular the figure of exposure of 21 billion euros to forex risks. The writer is right. It's an error. It's 2011 and not 2010, and we apologize for that. Thank you for that specific answer, sometimes technical, but perfect. We will now turn it over to the floor. If you want to ask questions, raise your arm. Mr. Bullion has done it first. He will now be the first one to ask his question. Mr. Chairman, I would like to come back to the various aspects of your presentation, the results, the ambition plan, the dividend, and the share price. But before that, I have a question on your notice of meeting. It's on page 436, the liabilities of the corporate accounts. It's there are 2 billions indicated, 2.1 billion, the carryover. You know the importance of that carryover, which is one of the factors of the role factor. And in the notice of meeting, the third resolution, and that forward calling is put at 9.2 billion euros. Can you explain how you move from the liabilities of the corporate accounts to the third resolution? Now, the presentation of your results, Mr. Chairman, I had read in your release that you had quality results in 2011. I don't think so. I don't think so because your underlying earnings are down by 15%. It is only thanks to exceptional capital gains by selling your assets in Australia, in New Zealand, in Canada. And you did where you disposed your stake in Taikong Life, the fourth life insurer in China. It is only thanks to these capital gains that you were able to post a net income up by 39%. Now, these countries, these geographical areas that you have withdrawn from, how come, if they are strategic, how come they are no longer strategic? You've talked about your AXA ambition plan. Last year you mentioned it. You should have asked yourselves that for 2011 the results are not very satisfactory. The underlying earnings are not satisfactory. And more clearly, the ROE from operations, which is a return from operations, is down by 1.5 points in 2011 relative to the previous year. With respect to your strategy, you're present in high-growth countries only in Asia. So you bought out the minorities in your insurance assets in Asia. Could you tell us for what amount, and can you tell us for what additional contribution to the results? Now your dividends stable compared to 2010 at 0.69 euros. Let me remind you, Mr. Chairman, before the crisis you had paid out €1.20. Let me say also that I'm worried about your ability to pay out, and I'm wondering if even by maintaining that level of dividend, you wouldn't be forced to dispose of other assets, namely make even more shaky your economic model. I've seen that your only lever was the resilience of that economic model. This takes me to the share price. Mr. Chairman, you've taken the helms on May 3rd, 2000. On an equal basis, the share price has been divided by 4. Certainly, it had reached its highest at the time. Look, I believe, Mr. Chairman, that you are in a very comfortable armchair. I believe that your model is not working properly. And I believe also it is up to the board of directors to ask itself the question if they shouldn't consider a new top manager in new seat. Thank you, Mr. Bulidon, for your questions, which, as always, are detailed and relevant. Let me ask Gérald Darlin to answer on the carry forward, but regarding the quality of results and the ambition AXA, the model, and our share price. On the quality of our results, the net income is up by 49% and not by 39%, and certainly because there are a number of exceptional capital gains that were obtained, but admit that 2011 saw the default of Greece, a sovereign state, which heavily weighed on our accounts. A number of European authorities, among them the French government, had induced financials to keep the Greek securities, that saying that no European country would default, and restructuring led to giving up part of the value of these securities. And let me add also that the net result, for reasons that you know perfectly well, because you are an expert in terms of accounting standards, is not necessarily the most relevant regarding the reality of the economic performance of the company, given the volatility of some elements that base it. So I will try more to look at the income from operations. And now, yes, operations dropped due to a number of charges that we had to take on assets due to the financial crisis. And the underlying earnings remained stable with a major crisis taking place. It's not a very good performance, but below of what were our ambitions over the medium term. But I told you that the goal we had was the medium-term goal if the economy as a whole would operate in a fairly stable way. Look, we had in 2011 a decrease in stock markets and in interest rates, which, as you know, is not favorable to us. In our three segments, two worked quite satisfactorily, which is P&C and protection and health. Now, savings and asset management certainly were under pressure, but all in all, underlying earnings, I believe, resisted quite well. And if I look at the goals of Ambition AXA, you said that we didn't fulfill them in 2011. It is true on the ROE. We said that we would hit 15% in 2015, and we still believe that we can still hit that amount. Hadn't we had the Greek element, we would have been closer to this. Now, the cash flow goals, which is an important element to nurture future dividends, were goals that were surpassed, and the combined ratio goals, also in the P&C, were also exceeded compared to our forecasts initially. So the landscape is not as bleak as you seem to picture it. And then you explained that we are present only in Asia, and that in Asia we had sold stakes. It's not accurate. We are not present only in Asia. Our presence in Asia is growing, but I'm reminding you here that Turkey, which to me is not part of Asia, is a market where we are the first P&C insurer, and also Mexico is a country where we have become again the first insurance company in P&C. And let me remind you that in Morocco we are the second P&C insurer, and therefore our presence in emerging markets is not limited to our Asian presence. Our Asian presence is growing. We sold the stake in Taika, which was a stake coming from Winterthur, because we felt it was relevant. That stake was a minority stake without any ability of having access or influence on the management. We prefer to exchange to have a capital gain which is comfortable on Taycan for investments that we are doing, for example, by taking over the PSC of HSBC in Asia, by developing our partnership agreement with Mandiri, which helped us become the second insurer in Indonesia, and quite a major one in the P&C business in that country, instead or having an agreement like with ICBC in China, because these agreements are real strategic agreements and not passive stakes. So no, we are not only in Asia. Yes, we are developing our business outside of Asia. We are an insurer. which has a strong presence. I could have mentioned our business in the Gulf region, in the Persian Gulf, where we have a double-digit growth every year with excellent results. Nicolas Moreau is telling me that we are the first insurance company in the Ukraine. We have a strong stake in the second Russian insurer. So Asia is expanding quickly, but looking only at Asia would be an error. On the dividend front, yes, you are right. The dividend is less sizable than it was before the crisis. It is accurate. It is the case in most of the financial institutions due to the reinforcement of the needs in capital for such institutions, due also to the fact that businesses are not exactly what they were before the crisis. This takes me to the last part, which is the share price. It's true. I've started my function. I probably don't have the right timing. Probably Claude Bébert had the better timing. I became chief executive officer at the peak of the markets. The CAC was at about 7,000 at the time. And what we've shown you before shows you that the performance of AXA, and we're unhappy with this every day. We are all shareholders who want to share the fate of this company in which we believe. We believe in its business, but however, the stock markets are half of what they were in 2000, and financials in general are in between 1/3 for those that didn't perform too badly or have disappeared from the rankings. And let me remind you the list of those who were our main competitors in those years, and that list sometimes resembles very much a cemetery or graveyard or a hospital. AIG was the first global insurance company. It lost 97% of its value. Even our alliance friends who over 10 years didn't have blistering performance. The German government gave 17 billion euros to save the Dresdner. And if you look at what happened with ING, with Fortis, it's all those who were our competitors at that time. I don't think that the situation was easy for them and that their performance was better. We're not rejoicing at the AXA performance. What we're trying to do is to master what is in our hands. What is in our hands is to develop underlying earnings, and it's the ability to try to make the result of that company as independent as possible from the financial turmoils that have crushed most of our competitors. You might feel it to be inadequate. We would like it to be better, but we consider over 10 years the fact of never having lost any money, of always having continued to pay out a dividend, even if that dividend is less sizable than at the highest. It's not great, but it's honorable in a world which hasn't been very easy. This is the answer I wanted to give you, and I will ask now Gérald Darlin to answer the corporate result.
Given a result in roll forward 2.2 billion, that must be put in comparison with the earnings for the year, which is 8.6 billion. So in total, this means that there's an ability of 11 billion. What can we compare this figure to? This figure, as I was saying, is compared to the amount of the dividend that we are going to submit to your voting, which is 1.6 billion. This means in total 11 billion against 1.6 billion, which is a multiple of close to 6. I would like to add something to what Gérald Darlin said to answer Mr. Bellidon's question in which he was asking whether it would be able to maintain the dividend without making any additional disposals. AXA's operational cash flow went from 3.7 to 4.2 billion euro, and there was a figure that I did not comment in this page, which stated the dividend payout by our subsidiaries accounted for 76% of the amount. We want to make sure that our subsidiaries pay out or pay back to the group the earnings they make. Therefore, we have no concern about the ability of the group to pay out a dividend in the future without further disposals. Norbert. I would like to add the following. I would like to specify that the board of directors supports the top management of the group, and the board considers that the strategy carried out currently will certainly bear fruit. AXA is operating on a long-term market that is good in the future, and I think that AXA has a lot to succeed in the future, the quality of its managers and of its leaders. AXA is going through difficult times that are the result of a difficult economic and financial environment, which is very tricky and affects all companies by the same token, and certainly insurance companies. But given the context, you've probably noticed that AXA's results are relatively resilient and that our balance sheet is sound. And thank you. I'm still there. Yes, number 4. I'll take question number 4. Madam, you have the floor. Good afternoon. My name is Marie-Pascale Duvernois, AXA Corporate Solutions. I'm an AXA employee at AXA Corporate Solutions. I would like to know why you joined the board of directors of Nestlé, the company Nestlé. Thank you. So far, I did not want to sit on any other board of directors of any other company than the group AXA. But this is something I discussed with Jean-Martin Folz and Norbert d'Entresang as two chairmen of different committees. And I think that the interest in taking part in the board of directors of Nestlé was worthwhile. Nestlé is a global company, which is a very high-quality company, which is very active on emerging markets that are of interest to us, as their recent acquisition have shown. And it's a company for which their problem of relation with the customers is a problem or an issue similar to ours. They have concerns that are similar to ours, and it's a company that is interested in developing or in sustainable development, namely for water resources and food supplies. And their take on the business is relatively close to our take on the world, generally speaking. Therefore, I deemed it useful, and the board members supported me in my decision. I deemed that the interest of the proposal was worth a positive answer. My intention is not to multiply my attendance to different board of directors meetings outside of ours. Any other questions? Number 9. Christian Fèvre, I'm an individual shareholder. Mr. Chairman, ladies and gentlemen, good afternoon. My question is a practical one. I wanted to change insurance company, and I looked at AXA's offer for home insurance policies. And more specifically, I looked at damage to real estate. For fire, damages resulting from fire, according to the information I got from a general agent, the guarantee is capped at 75% of the damage incurred. Now, if I understand things correctly, this means that there's a remainder of 25% that is at the expense of the policyholder. For homeowners that do not have very important means, this is difficult to foot. Now, are you going to change your coverage to be in line with the competition? Because some other insurers provide 100% coverage for fire damage. Thank you. Thank you for the question. I am turning to Jean-Laurent Garnier, the head of P&C. Would you like to add something? Yes. It's very difficult to give you an answer in general terms without looking at the details of your particular case, but there is no systematic reflection on the fire guarantee compared to any other guarantee of home ownership. It all depends on the structure of the contract and what was agreed with you in terms of the amount of the capital guarantee. This is stated in the capital of the franchise that might or might not apply. This is also in the contract, and the type of subscription that you chose. I think your specific case because there is no policy of discrepancy compared to our competitors. So we'll be happy to look at the details of your case very soon. Thank you. I'll take number 2. Chairman, ladies and gentlemen, I would like to come back to the dividend. For 1 year now, the government demands that companies, the top French companies, part of the 40 companies, when they increase dividends paid out to shareholders, increase this. And here there are 50 free access shares given to employees, which is the equivalent of 600 euros, which is good. Whereas we remain at 69 cents. We're talking about the crisis in Greece and all of that. Now, this means that once that we remove social charges, this is amounts to 45 cents. So we thought that you might have made a little effort for your loyal shareholders who've lost half of the amount of their dividends since 2007. This independently from the crisis. Thank you. Thank you for the question. Now, we do not control laws passed, the legal provisions on what was called, rightly or wrongly, the Sarkozy premium, are legal provisions which are imposed to us and that we need to abide by. The group was cautious in approaching the matter, because the premium paid out is a premium of 100 euros. Of course, we wish to hand out free shares to all of our staff members all over the world for a very simple reason, which is that we believe that the association of employees is essential, and rigging in employees to the success of the companies is essential. And it's difficult to be a financial company today in the world because markets are tough, regulations change frequently and are more and more constraining. And if we want to have good employees and be successful, we have to line interests up, employees and shareholders' interests. So paying out free shares or handing out free shares to all of our staff members, even to the lower levels in the group, those who do not necessarily have access to performance shares or others, I think this, or having part of their savings directly linked to the fate of the share and shareholders seemed reasonable to us. That is why we wanted to do this. The increase of compensation levels within the group is a reasonable one. That compensates performance, that compensates the quality of the work put in by our employees. But it seemed to us that it was not unreasonable, given the current circumstances, to try and increase the loyalty of our employees and shareholders to this symbolic gesture. And of course, we all hope that the evolution of the economy in general and that the evolution of our earnings will allow us to increase dividends paid out in the future. But I'm afraid that we will have other threats weighing heavily on this in the years to come. If only listening to what we've heard on tax matters, taxes on capital in the future. We will do whatever we can. We will do our maximum to try and increase the net income of the group and the earnings of the group to be able to pay our shareholders back. Number 4. Good afternoon, gentlemen. I would like to hear an explanation on the figures, or prospective figures, that or projected figures for 2012 in the different lines of business. What are your projected earnings to give a global earnings figure for 2012? Can you give us a detailed explanation for projected earnings like other companies did, for example, Bouygues? And they projected the expected earnings for every single one of their lines of business or branches. I think it would be interesting to have to have this? Well, this is not part of our policy. We don't give projected figures in advance. I think it would not be reasonable either, given the uncertainty of the markets. If I turn the question around, I would say, well, if people or anybody can say at what level interest rates will be, where the stock market will be, and how the euro will stand at the end of 2012, well, we might be able to make reliable forecasts. The only thing we can say is what the trends will be on the elements we have control of, and I think I said so in my presentation. For P&C, we had a good year in 2011. We think that 2011 looks good in terms of number of customers, in terms of pricing, and in terms of loss ratio, even if we have to remain very cautious. But we still have good prospects for health and protection. And as for asset management is still under pressure as a result of erratic markets. So we can only give you trends, but we do not want to give any forecasts, because volatility and uncertainty on relating to too many levels that have an impact on short-term results prevent us from doing so. 2 questions. I see 2 at the back. Good afternoon. My name is Vivian Netter. I would like to come back to risk. We saw that 2011 was a year with the greatest number of natural disasters. Your business is submitted to more and more risk. Wouldn't it be a good thing to set up a risk management committee with members that are specifically dedicated to that? And Mr. Stefan Lieper joining the group, I think, is very appropriate in this respect. So what do you do for managing risk and for securing data? Because I think this is a recurring matter. We know that in 2011, every data stolen cost 72 euros, whereas it was 30% less expensive the previous year, not to mention the price or the cost price of losing a customer. You have not mentioned fiduciary risks, like in Canada. Of course, you sold your subsidiary in Canada, and I know that you have, and I can only pay tribute to this, I know that you supported 83 research teams working on risk. Can you tell us more about that? And my second question has to do with the say on pay. Many countries have taken on board this system. Do you think you might follow in the years to come? And then I have a last question on internet sales. There seems to be an ongoing concern with legislation today. The European community directives are different from our French regulations, so how can we manage both, or how are you going to harmonize all of these rules? Well, thank you for this multiple question, madam. I think we're going to try and share out the weight of the answer between different members. Here, I suggest Denis Duverne answers the part referring to the risk committee and risk management, if we can widen your question to include management, to your question about risk specifically. Veronique Veil will talk about data security, and I will say a couple of words about say on pay and research. And Nicolas Moreau will answer your question on internet sales. I will start answering your question, on setting up a risk committee. Well, for an insurance company like ours, whose business by nature is managing risk, is different from any other company. And the way the board of directors wanted to tackle the matter was the following. The board members asked the financial committee to state their opinion on the risk policy of the group, which we call our risk appetite. The board of directors asked the audit committee to make sure that management takes on a level of risk which is in line with a standard set by the board of directors upon the advice given by the finance committee. This is how we tackle risk and how we manage risk. Stefan Leppe will, of course, be closely linked to the topic since he certainly joined one or another of these committees according to the decisions made by the board after this assembly meeting. As for risk management, generally speaking, this is a topic of increasing importance for AXA. And I think Solvency II is a directive that goes to show the importance of this, and when it will be implemented, you will receive every single year a report on how risk is assessed and managed. And this will be a report that will go into greater detail than the general annual reports you receive. Thank you. I'll give the floor to Véronique Vell. Good afternoon, ladies and gentlemen. To come back to data security, what we assess, globally speaking, is IT risk. We spend 2.5 billion in technology worldwide, and we invest between 90 and 100 million in ensuring data security. So our governance, which is centralized, allows us to give recommendations to different countries and to follow every specific type of risk which is related to IT security, and to have, in return, very detailed reports. Twice a year, I submit these elements of information to the audit committee, and I have a plan of action which is relatively detailed. I report to the audit committee on the implementation of said plan, and with specific issues in different countries. I think we have the proper level of the governance which is already in place. We invest heavily in ensuring data security, and we carry out tests on a regular basis to make sure that IT security and the risk of intrusion is fended off. To answer the second part of your question on internet sales, if you're talking about developing our business on the internet, let me say that we are thinking about speeding up our business through the internet. This is something local, and it is being discussed with the different countries. If you're talking about the security of transactions when you're talking about the internet, then I'll give the floor to Nicolas. Or do you want to give me more details about what you meant in your question? Well, let's give the floor to Nicolas right now, who's going to talk about security of securing internet connections. Well, especially for life insurance matters, when we're talking about online subscriptions to a contract, we want to make sure that the information is secured over the internet and that all of the information is legally secure. To do so, we use third parties who store the information, and we have a very sophisticated approach to ensure that the transactions have legal value. And this is what we call trusted third parties, who are like electronic safe boxes. The information remains with third parties, and this allows us to have proof of the contracts and the documents and the elements of information typed into the internet. Thank you, Nicolas. I will give the floor to Norbert d'Entresson, who is the chairman of the Compensation Committee. What about Say on Pay? I think AXA will line up with its competitors if things seem to be going that way. But what I would like to say is that setting compensation levels is one of the prerogatives that generally rely in the hands of boards of directors. Companies seem to be operating very complex environments today, and the assessment of managers' performance is something difficult to do. I think the directors are well positioned, or at least in the best position to be able to do so. Allow me to remind you that the Assembly has a sovereign say as to the attribution of stock options and performance shares. Under French law, consultative voting does not exist. And this, I think, might actually take the responsibility of this away from the board of directors. I think the transparency of AXA in its communication about compensations, I think, should certainly satisfy shareholders' expectations in the field. And to answer the last part of your question on the Fund for Research, this is an initiative that we set up 5 years ago, which is to grant 20 million euros per year to researchers all over the world who are doing research on topics that might be close to our concerns. Like, for example, natural risks of natural disasters, or risks linked to the aging of the population, or financial risks, or social risks. We have a very high-level scientific community with members from all over the world, and they select the projects we grant funds to. And the kind of contribution we give to them can include financing research chairs to financing PhDs. This is an initiative that was very well received by the scientific community, and that enabled us to move forward on certainly very important subject matters that are related to the life of our customers. This is something that we do not own. It's not exclusively ours, and we wish scientists to be able to impart their findings to the rest of the world. This is just not for the benefit of French institutions, but all over the world. And I think this is a good way of anchoring AXA in the long term and anchoring it as a brand that is interested in long-term problems. All of the groups that have done so have generally had all sorts of positive returns as a result of it, not only financial. Now, so much for your very long question. I think we have to alternate. We have to go from the left side of the room to the right side of the room. Good afternoon. I would like to ask a question about AXA Bank. Nobody talked about AXA Bank. First of all, I would like to pay my respects to Mr. Ramé, who is your financial director, and who was our sales inspector from 95 to 98. And I would also like to ask you what your ambition is for AXA Bank and what your projects are for loans. Loans and for real estate or car purchases. Thank you. To answer your question about AXA Bank, I think I'm going to give the floor to Nicolas Moreau. And I'm sure Emmanuel Ramé was thrilled to hear your encouragements and your tribute. Well, we have great ambitions for AXA Bank. And one of the things we're doing right now is we're trying to anchor the bank in or through our networks of commercial agents so that they can come in competition with bank branches and to come up with a very exhaustive offer for individual customers with savings plans, bank cards, loans for purchasing car or housing. To the day, we have 800 general agents who are involved in banking. We have 300 or 400 out of the 2,800 who are fully bank proficient, if I may say, because they have undergone training and are specialized in banking products. And right now, we're launching a speeding up plan for banking activities, which will come as a support and training plan for our employees. And this for subscription of real estate loans. As for Banque Direct that was bought from BNP Paribas 10 or so years ago, we're carrying on down that avenue in the same direction, and we're anchoring even more so than we did in the past our banking activities with our general agents. Thank you. Any other questions? We might take one or two. Number 9. Good afternoon. My name is Jean-Pierre Emeriot. I'm an individual shareholder. I have 2 questions. You talked about regulatory constraints with Solvency II that are not yet finalized. But I'm thinking about the constraints all banks will have to face with Basel III, and I'm thinking about bank insurance. Wouldn't it be interesting for AXA in the months or years to come to have an opportunity of external growth through several banks who, in order to build up their equity, will have to sell their insurance subsidiaries? So wouldn't that not be an opportunity for AXA? And secondly, can you tell us about your policy, your investment policy for 2012, with the breakdown between sovereign debt and corporate bonds? I think corporate bonds are better because they're less risky and provide a better return. And what your policy is for investing in securities, knowing that with Solvency II you will invest less and less in stock, given the existing volatility and risk entailed. Even if I'm both pessimistic and optimistic for AXA, I'm a bit less optimistic about the evolution of the stock market in the future, because all of the major institutional investors invest less and less in stock and in the stock market. So it's the stock market is only left to individual stockholders, which is not enough to hold the markets, especially to face up to what we expect in the months to come.
Thank you for your question, with two sections very relevant. On the bank insurance, to be to the point, certainly Basel II makes the holding of subsidiaries of insurance groups more expensive, and people are asking themselves questions about this. One illustration of what you are foreseeing is the agreement that we have hammered out with HSBC, where we're taking over the P&C insurance they have in Asia and in Mexico. The development of the bank insurance in emerging countries is a means for us to speed up our development there. And this is part of those things that we will be looking at carefully. Another example of that is the deal in Italy with Monte Paschi di Siena, with whom we have a 50-50 venture on this is another bank insurance partnership. What we're looking for is a partnership that is balanced. Each needs to be a winner, and the insurance should not be the one that only provides insurance products with limited margins. So we might have other opportunities. Maybe the landscape will be reshaped. Now, on our investment policy, as a matter of fact, by describing it, you understood it. By querying us, you have understood it. We invest due to regulations with the bond Solvency II limits us to 3 to 5% of investment in shares. As a seasoned citizens, we've been deploying this for 10 years, and given and also the trends of accounting standards, because we feel they don't fit the economic model of our reality. But that's a reality. We're adjusting to that model. We're favoring corporate bonds. We want to reinforce them when they are of good quality and have a little bit, have fewer sovereign bonds, and we shall develop, and you saw some elements in the press about this, we want to have joint loans with some banks with good quality corporate bonds, because we believe that because of their constraints, banks perhaps have less ability to lend. Maybe good quality corporates will be happy to find with insurance long-term fundings that they need. It would used to be the traditional role of insurance groups. It's again being the case. So maybe before we vote the resolutions, is there one last question? Number 3. Good evening, Mr. Chairman. Jean-Marc Marcia, individual shareholder. Question pertaining your P&C business. I was highly interested in Mr. Duvern's presentation, but what called my attention is that in the results, 27% of the financial results are due to the 8 million of French customers. How can you account for these 8 million out of 127% of the results? That's my first question. Second question, how come you don't differentiate in the P&C part, the personal part and the industrial section? The earthquakes in Japan and the floods in Thailand have strongly hurt the industry. Therefore, perhaps we could see a ratio between the industry and the personal lines in the P&C. It would be interesting. On the first part of your question, sir, historically, French business is profitable and continues to grow. The second reason is very straightforward. In emerging countries, the amount of the unit basket of the customer is much lower than in developed countries in the first few years at least. The individual premiums paid by customers are of a lower amount. Among the 100 million customers you have in developed countries, people who have a bigger so-called basket, and emerging countries, they are paying lower premiums, and we hope that they will catch up in the future. As regards the difference between individual risks and industrial risks, or the major risks, we also look at this internally. But we keep track of this in the specifics with the Asian disasters or claims. The most significant claims in terms of amounts probably hit major industrial facilities, but the number of individual personal people who suffered was very high in Japan. We look at what it cost us in life insurance in Japan. It was the equivalent of 500 million euros in terms of what you had to pay. So there were not only Fukushima type of plants that were hurt, but tens of hundreds of thousands of Japanese who suffered, and we were there just after to look at our teams there and to talk with them. Let me tell you, there were many individual claims there. Just a few words to specify that in our P&C business, 60% of the business is in risk with individuals and 40% with companies, and the profitability is slightly better with corporate risk compared to individual risk with respect to P&C. And lastly, even if 2011 was very poor in terms of natural disasters, it just happens that the group not being present in New Zealand and Australia and not much in P&C in Japan and with a small size in Thailand, the weight of natural disasters was quite low, I would say. I move now, if you agree, to move to the voting of resolutions. Let me remind you what is the final definitive quorum: 10,600. So there are 59.3% of shares participating in the vote, 1,880,000 voting. That's 64.8% of the total of the voting rights existing. Denis Duverne will now present the modalities of this vote, and I thank you for staying where you are until the end of the voting of these resolutions. You have an customized electronic device to vote on each resolution. You need to press down on one of the buttons for or against only once. Once the vote is open, your vote is displayed for a while. Just one vote per resolution. Please, an abstention equates to against. If you don't press on anything, it is under the control of our bailiff, and you must give back the device at the end of our meeting. Finally, please switch off your mobile phones during the voting. We will now move to the voting of these resolutions. We're asked to decide on 23 resolutions, 17 on the ordinary meeting and 6 for the extraordinary meeting. On the first ones, the first resolution aims at approving the corporate accounts for 2011. The voting is opened. The voting is closed. The resolution is carried. The second resolution aims at approving the consolidated accounts for 2011. The voting is opened. The voting is closed. The resolution is carried, adopted. Now, the third resolution aims at approving the allocation of the result and the payout of a dividend of 0.69 euros per share. The voting is open. The voting is closed. The resolution is carried. Now, the fourth resolution is a special report of auditors on regulated agreements. The voting is open. The voting is closed. The resolution is carried. Now, the fifth resolution aims at renewing the term of director of Mr. François Martineau for a term of 4 years. His resume is shown up on the screen. The voting is open. The resolution is carried. Now, the sixth resolution aims at appointing Mr. Shanlipe as director for a term of 4 years. His resume is up on the screen now. The voting is opened. The voting is closed. Carried. The resolutions of 17 to 14 aims at appointing the new representative employee shareholders to the board of AXA in replacement of Mrs. Wendy Cooper, whose term will expire now. You're asked to make your choice among the 8 candidates which are up on the screen. Mrs. Doina Parici, chairman, is the one recommended by the board. The result of the voting will be disclosed to you only after the 8 resolutions have been voted now. This is the 7th resolution aims at appointing Mrs. Doina Parici as a director on proposal by the employee shareholders for a period of 4 years. The voting is open with the resume up on the screen. Closed. The 8th. No mic, the mic. The 8th resolution aims at appointing Mrs. Fawzia Alouat as a director as proposed by employee shareholders for a term of 4 years. Her resume is on the screen. The voting is open. The voting is closed. Now, the 9th resolution. Its purpose is to appoint Mr. Olivier Dot as director as proposed by the employee shareholders for a period of 4 years. His resume is on the screen. The voting is open. The voting is closed. The 10th resolution aims at appointing Mr. Herbert Fuchs as director on proposal of the employee shareholders for a term of 4 years. His resume is up on the screen. The voting is open. The voting is closed. The 11th resolution it aims at appointing Mr. Denis Gouillou-Beauchamp as a director as proposed by employee shareholders for a term of 4 years. His resume is up on the screen. The voting is open. The voting is closed. The 12th resolution, its purpose is to appoint Mr. Thierry Jousset as director on proposal by the employee shareholders for a term of 4 years. His resume is on the screen. The voting is open. The voting is closed. The 13th resolution aims at appointing Mr. Rodney Koch as a director on proposal by the employee shareholders for a term of 4 years. His resume is up on the screen. The voting is open. The voting is closed. The 14th resolution aims to appoint Mr. Emmanuel Ramé as a director on a proposal by the employee shareholders for 4 years. His resume is up on the screen. The voting is open. The voting is closed. So we're showing now the results for the voting of Resolution 7 to 14. So Mr. Doina Palici Shehab has been elected now to the Board of Directors. Now the 15th resolution aims at renewing the the mandate of the PricewaterhouseCoopers for a duration of 6 financial years. The voting is open. The voting is closed. Carried. Now, this 16th aims at appointing Mr. Yves Nicléo as a substitute deputy auditor for the next 6 financial years. The voting is open. The voting is closed. The resolution is carried. The 17th resolution aims at authorizing the board of directors to buy the company's ordinary shares within the limits which are on display now. The voting is open. The voting is closed. The resolution is carried. The 6 following resolutions are within the province of the extraordinary general meeting. The 18th resolution aims at delegating to the board the power to increase the shareholders' capital through issuance of ordinary shares or securities giving access to ordinary shares of the company. The voting is open. The voting is closed now. The resolution is carried. The 19th resolution aims at delegating to the board the power to increase the shareholders' capital by issuance of ordinary shares without any preferential rights. The voting is open. The voting is closed. The resolution is carried. Now, the 20th resolution aims at authorizing to reduce the share capital by cancellation of ordinary shares. The voting is open. The voting is closed. It is carried. Now, the 21st resolution aims at approving a change in the bylaws related to agreements dealing with current operations and which are agreed under normal conditions under Article 21 of the bylaws. The voting is open. The voting is closed. Carried. 22nd resolution aims at approving a change in the bylaws relative to electronic signature. That's Article 23 of our bylaws, which reflects the order of November 9th, 2011. The voting is open. The voting is closed. The resolution is carried. Now, the 23rd resolution regards the powers which are necessary to carry out the formalities linked to this assembly. The voting is open. Voting is closed. It is carried. Thank you, ladies and gentlemen, for your attention. Ladies and gentlemen, I thank you for your loyalty, your patience, and your interest in the group. And we will meet again next year for the general shareholders meeting, which will be held on April 30th, 2013.
Je vous souhaite une bonne soirée.